Hi everyone, welcome to another weekly Forex forecast for the week ending June 12th, 2020. My name is Justin Bennett with Daily Price Action, and in today's forecast, we're going to talk about the Euro USD, the Pound USD, the Dollar Yen, the New Zealand Dollar versus the USD, as well as the US Dollar versus the Canadian Dollar. We'll see if the Euro USD put in a short-term top last week, and also where the Dollar Yen could be going as it is currently breaking a multi-year pattern. So let's get to it right now. Quick disclaimer that today's video is for educational purposes only. All views are my opinion and are not intended as investment advice. Forex is a high reward, high risk business, and you should not trade with borrowed money or money you cannot afford to lose. See the description of this video for the full disclaimer. Before we get started, be sure to hit that subscribe button and also click the bell icon so you get notified every time I post these videos. Also check out the join button where you can become a member of this channel and receive 5 to 10 analysis videos from me every single week. I'll show you the key levels I'm watching and how I'm approaching that pair, so you'll get trade ideas from those videos, but you're also going to learn how I trade price action, and that's going to make you a better trader. So first up we have the Euro USD, and as you can see, this market has put in a massive 500 pip rally recently. So we came out of this consolidation down here, which I was actually shorting these two tops, and I also mentioned that in the forums. However, since we broke out from this sideways consolidation, we've had a huge move up with absolutely no pullback. All right, Friday was the first day that we got some type of weakness, and it occurred right at this resistance area between 113.40 and 113.80. So I wrote about this on Friday, and the key takeaway from the video I made for members is that I did get short above 113, which again I also announced in the member forums. However, I'm keeping this position small because I need to see follow through from sellers. Specifically, I want to see some of these key support levels taken out in the coming week, including 112.30 followed by 111.50. If we start to see that, it would give me more confidence to start adding to that position as I get follow through. But as of right now, it's not clear if we are going to see this as a short-term top and a pullback into some of these levels and perhaps lower, or if we're just going to see a bounce and the market take out that 114 area. Now, if we look at the monthly time frame, as I mentioned on Friday to members, all of this through here is just consolidation, because remember that we have this multi-year wedge pattern, and until this thing breaks, all of this through here is just consolidation. So even though it looks like we have momentum on the daily time frame, if you look at the monthly and just how this has been trending over the past several years, really this is just consolidation. So until this trend line from the 2000 lows breaks down, or we get a break above this trend line resistance up around 116, perhaps 116.50, this is all just consolidation. So just like the dollar yen that I've been talking about now for weeks, this wedge pattern is the larger breakout pattern that I'm keeping a very close eye on in 2020, because I do think that a breakout from this multi-year pattern is going to send the market either higher or lower over the coming months and years. So again, for the week ahead, resistance comes in between 113.40 and 113.80. based on this ascending channel, and we also have a trend line that extends from some of these recent highs. Now, this volatility back here didn't play nice with this trend line. However, I still think it's important, as you can see, that Friday's session encountered selling pressure right at 113.80. As for key support, keep an eye on 112.30 followed by 111.50. So the pound versus the USD is still respecting the technicals that I've mentioned for the last couple weeks. So we have this descending channel that extends from these highs back through here. You can see where this support level actually flipped to resistance on these two highs. Now, last week I said that I would not entertain trading the pound unless we saw a retest of the 125 area. And I also said that I wanted to see some type of bearish price action from there if I was going to short the pair. But as you can see, Monday's session gave us absolutely nothing to sell. In fact, this rally right here hinted at a break higher. Furthermore, if I zoom in, you can see where we got this daily close above the 125 area, and then we also had a retest of it as new support. So this close right here broke this area, and then notice how we had this pullback and bounce right from 125. So this area between 125 and 125.30 or so is going to serve as support going forward. As long as we stay above that, we could see a push into 128, which is the top of that channel. The dollar yen has been really the only market that I've been trading with size, and members know that I was entering this market long back here before we even broke from this falling wedge pattern. I was essentially anticipating a break higher, which we got on this candle. 106.90 held. We then moved sideways for several days until this bullish pin bar formed, which I also discussed on the blog. In fact, when I pointed this pattern out, I said that 108 would likely fail in the following week, and sure enough, fail it did. All right, so this candle closed above it, and last week also took out 109.20/30. So that's the top of that wedge pattern, which means that for the week ahead, I'm looking at 109.20 serving as support, with resistance coming in right around 110.20. So if we look back here, you can see where 110.20 served as resistance and then support on a couple candles back here. It also served as support on several sessions back through this area. So 109.20 is support, 110.20 is resistance. If we see 109.20 fail as support on a daily closing basis, it means that we're probably going to go back and retest 108 because we haven't had a retest of that area so far. Now, just keep in mind that I'm still long here from just below the 107 area. So I added a little bit last week, which brought my average up to about 106.90. So I'm essentially averaged in right around this area, and I'm interested in adding a lot more to this trade. However, here's the thing. If we look at the monthly time frame, this is the pattern I've been talking about now for over a month. So this wedge pattern that's been in place since these 2013 lows and also this 2015 high, this is the pattern that I want to play. So if we get a monthly close above that 109 area, and keep in mind that we're still in the first half of June, which means we're waiting weeks for this pattern to break, because if you look at the daily and weekly timeframes, the pair is not respecting this wedge pattern on a daily or weekly closing basis, which means we need to see a month close either above resistance or below support. So this is the pattern that I want to play, because a monthly close above 109 is probably, unless it becomes a false break, it's probably going to go back and retest this top up around 124. Furthermore, on the monthly time frame, if you'll notice, there is a good chance that all of this price action over the last 20 years has created an inverse head and shoulders. So I talked about this before, where we have a potential left shoulder over here, we have the head of the pattern, and then we have a potential right shoulder. Even this March volatility tested the bottom of that right shoulder. So if we do see this wedge pattern break higher, 109 breaks on a monthly closing basis, and we do move back to that 124 area, that would be the neckline of this potential inverse head and shoulders pattern. And you don't have to be very experienced at trading to know that a confirmed inverse head and shoulders of this size, all right, we're talking about 5,000 pips, that would send the dollar yen much higher. And while that may seem impossible, just keep in mind that this last 5,000 pip rally between 2012 and 2015 took 3 years to play out. So this is not something I'm saying where we're going to go back and retest 124 next week, but it is something to keep an eye on, because if we know that a market is about to trend for years, it makes our job a lot easier, because we know that we want to be a buyer on pullbacks and not a seller. All right, so this is all something to keep an eye on. It's what I've been watching now for weeks, and it's what I'm interested in trading. So I still have my dollar yen long in play from around 106.90, and I'm interested in adding, but not until we get a monthly close above that trend line. So for the rest of you, for the week ahead, 109.20 is support, 110.20 is resistance. Again, if we see a close below 109.20, that means we're likely going to come back and retest 108. Next up, we have the New Zealand dollar, and just like the euro, this thing has taken off recently, and we've seen absolutely no pullback whatsoever. So recently, as you know, I was looking to short from the 6,200 area. So if we look at the monthly time frame, 62 is a key horizontal level based on some of these recent lows, and 62 is also a trend line that dates back from the 2000 lows. So this bottom trend line extends from these 2000 lows back here, and then we also have the great financial crisis low back here in 08-09. Now, this created a confluence of resistance around 62, and that was the level that broke down in March. So we had this March close below it, and I was looking for a short around this 6,200 area. Furthermore, if you look at the daily time frame, we also had this rising wedge that again signaled that potential weakness around this 62 area. But of course, the market had other plans, and not only broke through that area, but also took out 64.30 last week. But I'll be honest, and I could be wrong here, but I don't trust this move. Multi-year levels like this often get respected on a monthly closing basis. And considering that we're in the first half of June right now, I would not be surprised at all to see this move turn out to be a bull trap and to see June close back below that 62.50 region. Now, if I see the market start to take out 66, okay, so the top of this wedge pattern, that could change my mind, all right, because that would start to signal that this down here was the false break, in which case we could see the New Zealand dollar move much higher over the coming months. All right, so looking at this on the daily time frame, if I start to see this resistance up around 66 start to get taken out on a daily and weekly closing basis, again, that would change my mind and tell me that all of this down here was just one big false break that could send the New Zealand dollar higher. However, if we start to see a pullback and the market takes out this 64.30 support level and also aggressively retest 62.50, that could be a sign that this is the false break. So this is where things get tricky because we don't know, just looking at the monthly time frame, we don't know if this recent move lower was a bear trap, okay, so if this was the false breakdown here, or if this candle so far in June is the bull trap. So it's all going to come down to whether we start to see strength or weakness on the daily time frame. So again, if we see an aggressive pullback this week, 64.30 fails, as does 62.50, that would be a sign that this up here was a bull trap and the New Zealand dollar is headed lower. Alternatively, if we start to see that 66 area start to get taken out, that would indicate that all this down here was the bear trap and the New Zealand dollar is headed higher. So right now, the New Zealand dollar is kind of in a limbo where we're just waiting to see if this down here was the false break or if the price action so far in June is the bull trap that's going to send the pair lower. So I haven't talked about the dollar CAD in a while, and that's because this pattern back here that I thought was going to break higher didn't quite work out. So it looked like we had this wedge pattern that was about to send the dollar CAD higher, but instead the market took out 138.60 support and it even tested 134.20. Now this was the gap that formed back here. So Friday's session closed that gap, and that's why I'm talking about this today. So a lot of times when you see a gap like this and the market comes back and retests it, that area starts to serve as support. So this doesn't mean I'm going to go out and buy the dollar CAD because right now I see nothing but weakness. I don't see any reason to buy the dollar CAD. However, the fact that we stopped right at 134.20 on Friday tells me that if Monday we see a dip below this area and a recovery, okay, and it forms a bullish pin bar of some sort, that could be a buy signal for a move back to 138.60. Alternatively, if we close below 134.20, that could also present a selling opportunity for a move all the way down here into the 130 handle. So this is not something I'm really interested in, but I am keeping an eye on it early for the coming week, just in case we do get some type of bullish price action from 134.20. If you enjoyed this video, give it a thumbs up, leave your comment below, and be sure to subscribe to my channel. See you next time.